Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. Credit rating agency Moody's downgraded the U.S. sovereign credit rating by one notch from AAA to AA1. The downgrade was due to potential difficulties in federal funding to finance the budget deficit, as well as the rising cost of debt refinancing caused by high interest rates. The yield on the 10-year US Treasury remained relatively stable following Moody's rating downgrade. The Federal Reserve stated that interest rates will remain high in the long term due to frequently changing policies which could impact the economy. Retail sales data for April has been released, showing a growth of 0.1%, a lower increase compared to the 1.4% month-on-month growth in March. The initial data for manufacturing in May will be released soon. For April, the sector remained in expansion territory at a level of 50.2. China Zone. Industrial production data for April is set to be released and is expected to grow by only 5.7% year-on-year, a slowdown compared to the 7.7% year-on-year growth recorded in March. Retail sales data for April is also scheduled for release, with a forecasted growth of 6% year-on-year, slightly higher than the 5.9% year-on-year growth in March. Indonesia Zone. Bank Indonesia is set to discuss its monetary policy this week. The market anticipates that Bank Indonesia may consider cutting its benchmark interest rate, supported by the strengthening of the rupiah against the US dollar and relatively contained inflation. Indonesia's current account balance for the first quarter will be released this week, with the deficit expected to improve to minus $100 million compared to a deficit of minus $1,145 million in quarter 4 2024. Market view. The Indonesia Composite Index IHSG recorded a weekly gain of 4.01%, closing at the 7,106 level. This week, the IHSG is expected to continue its positive trend, supported by domestic sentiment, particularly from Bank Indonesia's upcoming monetary policy decision. The market anticipates a potential benchmark interest rate cut this week, despite the Fed not having lowered its rate yet. Controlled inflation and the strengthening trend of the rupiah against the US dollar have boosted market optimism that Bank Indonesia may proceed with a rate cut. In terms of fund flows, foreign investors recorded a net buy of 3.65 trillion Indonesian rupiah over the past week. However, on a year-to-date basis, foreign fund flows still show a net outflow of 48.81 trillion Indonesian rupiah. The three best performing sectors over the past week were infrastructure, energy, and financials, which posted gains of 5.87%, 5.66%, and 3.71% respectively. As of May 16, 2025, Indonesia's bond market recorded flat benchmark yields across tenors. The 5-year benchmark yield FR0104 remained unchanged at 6.51%, while the 10-year bond yield FR0103 was steady at 6.87%. Similarly, the long-term bond yields also held steady, with the 15-year tenor FR0106 at 7.00% and the 20-year tenor FR0107 at 7.01%. Meanwhile, the yield on Indonesia's 10-year global bond INDON35 declined to 5.38%, while the yield on the US 10-year Treasury rose to 4.49%, compared to 5.41% and 4.38% respectively on May 9, 2025. Indonesia's risk premium reflected by the 5-year credit default swap CDS declined to 80.02 basis points. Additionally, the rupiah strengthened against the US dollar by 0.46% on a weekly basis, reaching $16,445 per Indonesian rupiah. As of May 14, 2025, Foreign ownership in the government bond market stood at 906.96 trillion Indonesian rupiah, 14.38% of the total outstanding, slightly down from 907.73 trillion Indonesian rupiah, 14.4% of the total outstanding previously. The Fed is expected to cut its benchmark interest rate twice in 2025, with a total reduction of 50 basis points, following a 100 basis points rate cut in 2024. The U.S. economy remains on a soft landing trajectory, with projected annual growth of 1.7% in 2025. In line with this, Bank Indonesia is also expected to adopt an expansionary monetary policy in 2025, which is anticipated to have positive impact on Indonesia's economic growth. The bond market is projected to respond positively at first, driven by improving macroeconomic conditions, and this is expected to be followed by solid performance in the Indonesia Composite Index IHSG. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.